Quint Live. We are everywhere.
Good morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Vakil. Let's take a look at the headlines. Rising geopolitical tensions take a toll on the markets. The Nifty falls below its 20-daily moving average of 12,140. The volatility index is up another 10%. Rising crude oil prices impact the currency as well. The rupee weakens past the 72 mark against the dollar, the lowest in 2 months. The Nifty IT index is the only sectoral gainer. We have TCS, HCL Technologies, Wipro among the few Nifty advancers today. Titan is a top Nifty gainer as well after its quarterly sales update. And the oil marketing companies trade with losses after Brent breaks past the $70 barrel per mark, and of course HPCL is at its lowest levels in 8 weeks.
A lot of headlines today, Agam, owing to the geopolitical tensions that we've seen, Brent crude rising, rupee weakening, and of course impact on equities as well. So let me begin with the markets, what's happening, and starting off with volatility, how that has surged owing to the geopolitical tension. Remember, India VIX had touched levels of about 9.6 on December 30th. Today we are seeing rise of 14%, and this is after surging 10% by the way on Friday as well. So it's up nearly 50% from December 30th lows of 9.6, and the journey from 9.6 to current 14.5 has taken just 6 trading sessions. And of course, majority of the moves have come in the last 2 sessions owing to geopolitical tension. And remember, so far, fresh buying was being supported because of lower VIX as well, because we were at support levels of about 10 to 10.5. But let's see from here on whether the pre-budget rally that everybody was talking about can pick up momentum or not, or it will be geopolitical tension which will continue to weigh on not just Indian equities but the global equities as well. So having said all of that, let's take a look at Nifty, Sensex, Bank Nifty. All of them have seen sharp correction in today's trading session. In fact, Nifty, Bank Nifty, both of them have slipped below the 20-day moving averages, and Sensex also down about nearly 400 points in trade. And it's just not about the frontline indices. You are seeing correction coming across the board. So be it mid-cap, small-cap indices. In fact, I believe they've taken a sharper cut today. Yes, 1.5% cut for both. And the market breadth is just not looking good this morning. You are seeing more of declines. Look at that number. It's almost 1:6 in favor of the decline. So what's the next level that you should watch out for Nifty, Bank Nifty? I think 50 DMA will be key to monitor. For Nifty, 50 DMA is somewhere about 12,000 mark, and that's your psychological mark as well. So watch out for that. And Nifty Bank, 31,330 is the 50 DMA. So watch out for these 2 numbers if the markets were to scale lower. Options activity in terms of Thursday's expiry, I think the levels will change now considering maximum open interest. So far we were talking about 12,300 on call and 12,200 on put, but that doesn't hold true now, because in today's session, after the sharp fall that we've seen, put writers have started running for cover, and there is aggressive writing on the call strikes which have come in today's trade. So as you can see, 12,200 put, which was sitting with maximum open interest, has started to witness unwinding, and fresh writing is coming in at 12,100, and even the 12,000 call has started to see some fresh addition. But 2 strikes, I think, to monitor. Majority of the action has been seen at 12,100 call, which has added 10 lakh shares, while the 12,000, which is a key support, that put strike has added nearly 8 lakh shares as we speak, Agam.
All right. Well, let's also take a look at all the stocks which will be in focus in today's geo trade on the back of an increase in open interest. And there's a lot of volatility in the markets, which is why we are likely to see a lot more losers coming in through. Perhaps that's where we are seeing a lot of traction, except for, of course, a handful of names from the IT sector, which are seeing advances as well as an increase in open interest. You have HPCL, which is under pressure. It's down another 4.5%. Just Dial and Canara Bank, among others, which are also looking at sharp cuts and an increase in open interest towards shorts. So we'll continue to keep an eye on some of these names. Let's take a look at those stocks which are seeing unwinding in today. And well, Torrent Pharma is looking at about a short cover, or rather longs unwinding, considering its underlying is down 1%, and SRF is the other one, but not too much to speak for otherwise. But it is going to be about well, institutional facing stocks considering it is overall risk off sentiment for now, Navneet?
Yep, so a lot of stocks to talk about, and on the show today we will be discussing 3 stocks and of course more stocks with our technical experts. But on top of our list is Titan, which has reacted positively to the quarterly update. That's for the December quarter. In fact, that's your top gainer on Nifty as well. Oil marketing companies are under pressure due to rise in crude oil prices, and HPCL particularly has been trading below all its key moving averages. And finally, Cholamandalam investment, where fresh shorting has come in the opening session itself, as the stock has fallen for the second straight day. It's also trading very, very close to its 100-day moving average.
All right, then let's move on and get in our experts for today. But before that, here's a reminder: if you have any queries regarding futures and options markets, you can call us on 022-454-04141. Of course, write to us on Twitter, Facebook, and YouTube with the AskPQ hashtag. Today we have with us Abhijit Phatak of Definedge Solutions and Navneet Daga of Yes Securities joining us on the show. Good morning to both of you. Thanks for taking the time out. Navneet, I start with you. Where do we go from here? There's clearly a bounce of volatility coming through. What's your assessment?
Well, hi. Look, what we have observed is basically we were in the kind of a narrow trading band, and now it's started to see some kind of an expansion of the trading band with a kind of a jump in the walls that we have seen in today's session in the last 2 days. It's making me believe that there's a greater chances that now the participants will have a much more preparedness to this kind of an event. We have not seen this kind of a big gap downs or gap ups in the markets. That's where the traders, the option writers were making a lot of money in the last couple of months. But now the changes because of this entire geopolitical scenario, there's a greater chances that the walls will start to pick up, and we see this two-way movement started to happen. So to my understanding, now the upside looks to be very much capped unless we started to trade about the 12,300 levels going into the budget event. But to my understanding, every rise on the upside will likely to meet some kind of a supply pressure, and there is a greater chances that now the 12,200, 250 odd levels is likely to be some kind of an cap on the upside, and we can see a downside move towards that 11,900 levels as well. Once we started to break below that maximum open interest zone of 12,000 on the monthly options. So to my understanding, the overall strategy one should be using is at this point of time is one need to be cautious on the markets, and given the kind of a scenario that we are getting into, one need to see a kind of an mode by way, but you should look for a portfolio protection or the kind of an hedging strategies in the market that can work out well in this kind of a scenario.
Okay. Hi Abhijit, good morning to you. How are you placed today looking at the gap down opening that we've seen so far? It was a buy on dips market, but today's gap down opening, does it change things on the chart?
Yes, good morning Navneet. As long as Nifty is below 12,200, 220 on the spot, this is continue to remain a sell on rise market for now. Only thing is there is a support near 12,050,070, which is today's low. If it closes below today's low, then I'm afraid it can go down by another 100, 200 points. At the same time, any rise near 12,200 should be used to go short with a stop loss of about 20, 30 points higher. And at least today's low as a target, and if it closes below 12,050 spot, then much lower.
Okay, well, I believe Navneet has a bear put ratio spread. Before we go across to him, let me just very quickly explain what that is. That is when you employ buy a put and sell a tool of puts of a lower strike, of course, in anticipation of, well, near-term, slight weakness. But Navneet, why don't you go ahead and tell us how and what you are applying with respect to the strategy?
Look, in the strategy, what I'm playing is basically that I'm looking for a very limited upside in the market, and if my call goes wrong, I got a limited downside in my strategy. The largely strategy plays out well when we got a kind of a retracement that I'm talking about somewhere in the 12,000 to 11,900 on the Nifty. So one need to buy is basically one need to buy a monthly option of 12,200 on the Nifty, and simultaneously sell 2 lots of 11,900 puts on the lower side. Largely the skew on the options is looking likely that it's very expensive on the now OTM options. So selling options on the twice the quantity on the lower end would make the strategy quite fruitful. And given the kind of a correction that we have, both the sides of movement that we are seeing, The upside limited, on the upside we got a limited fixed loss of almost 15 points. That's an outflow that we are getting in the strategy and initiation. So even if market expire anyways about 12,200 levels, we got a fixed loss of 15 points. But if the strategy is, if the market moves in our direction that we're talking about 11,900, the maximum profit that one can get is somewhere into 300 points in the strategy. But only thing that one need to keep in mind is basically we started to lose maximum once we started to see a break-even point below 11,600. So that's where I should keep a very deep stop loss levels on the Nifty. That's still very far away. It's kind of an uncertain zone that we are talking about. If we happen that, and then one should look to exit in the strategy.
Okay, so that's a bear put ratio spread on the monthly expiry being recommended by Navneet. Before I move on to the individual stock picks, Abhijit, just want to take your view on Nifty Bank as well, which has been underperforming for last two trading session vis-a-vis the Nifty. Our viewers, they want to know if there is any sort of strategy that can be deployed on Nifty Bank for the day.
Same like Nifty, Bank Nifty has in fact given a bigger breakdown below 31,900 on the futures. So any rise is a sell with a stop loss above 32,000. If you get Bank Nifty futures near 31,900, it is a short, but not at lower levels, because like I said, Nifty might be near support. So this might not be a good level to short. It is a short on rise.
Okay, what about ideas in terms of stocks? Abhijit, I'll come to you. What stocks looking interesting to you?
One stock which might buck the trend is one of the pharma stocks, Lupin, which showed quite a good strength last week. As long as it holds 760, 765 on the futures, that can go up to 780 or maybe even 790. So it is a buy on dip with a stop loss below 760. And another weak stock, which is Apollo Tyres, it can be sold on rise with a stop loss above 167, or the confirmation will be above below the day low, which is 161, and target might be 155, 150.
Okay, so one long and one short call coming in from Abhijit. Navneet, over to you in terms of individual stock futures for the day. What are you recommending?
Look, I got two short ideas. Basically, largely the kind of view that we have. Basically, we are moving gradually lower down on the markets. So similarly, having one stock which from the large cap space, that is Asian Paints, that has seen a big breakdown. It has seen a multiple tops formation with on the daily chart as well as weekly charts on the upper side, somewhere in the range of 1810 to 1815 range. And this is a multiple breakdown from that level. And to my understanding, this breakdown levels can take the stock towards somewhere into the 1650 to 1670 zone on the position side. So one can sell January futures in the range of somewhere in the range of 1725, and on the downside, I am expecting a target of 1670 to be achieved, and keeping a strict stop loss of today's high level somewhere into 1746. The second stock on my radar will be sell side on Canara Bank. Look, the overall PSU banking basket has started to look weak, and in the SBI, since kind of a breakdown that it has seen, a sector leader has seen a big breakdown. There's a chances that the follow-up movement on the downside will come from the larger space as well. So Canara Bank, one can look to be on the short side with a stop loss on the upper side of somewhere into 222 zone, and on the downside, I'm expecting a target of 200 levels to be achieved on this week itself.
Okay, from there on, let's move on and talk about a handful of stocks we want to address. And I'm going to talk about Titan Company. It's one of the few gainers in today's day of trade. This is after some amount of respite, if I can actually call it that, with respect to their expectations and projections for the third quarter earnings, where jewelry sales have risen around 11%, and it's been largely within the guided range. Considering the guided range for the second half of this financial year has been between 11 and 13% for the jewelry sales, which is why the stock is up 2.5%. There hasn't been as much traction in open interest in terms of change. But we must remember that there has been quite a bit of weakness in Titan lately, notwithstanding the kind of gains that we saw today. Navneet, I'll come back to you on Titan Company. How would you trade this?
Look, it's very difficult stocks to trade. We have seen number of times it has seen a breakout. It's not sustaining. Similarly on the lower side, it has seen a breakdown and it's now started to make a comeback out of the news flow from the company management. So to my understanding, on the charts, if I look out somewhere into 1140 to 1130 range, it has seen a kind of a formation whereby the base formation started to happen. To my understanding, until unless that has not been taken out, there's a chances that we might see an up move, but there's a chances that we might see a supply pressure on the upside in the range of somewhere into 1220 to 1225. that's an upside is also looking limited on the charts. So it's better to wait and watch and get in an entry on the lower bond. If you're getting at the 1150 odd range, one can merit to be on the long side and the stock, and stop loss on the lower side should be placed at somewhere near to below 1120 zone, and one can ride an upside if you're getting towards the 1220 odd zone.
Okay, that's Titan Company for you, this one of the top gainers on Nifty today. But moving on to the losers, and that's HPCL. Remember, all the oil marketing companies are down, but this one is underperforming the other two as well. So while BPCL, IOC are down about between 1.5% to 2%, this one's down 4%. And of course, HPCL as a stock on the charts has been trading below all its key moving averages. Abhijit, we are seeing fresh shorting here as the open interest has also gone up by between 10 to 11%. After today's correction, would you advise someone to create fresh shorts on this counter?
Not here, but definitely on rise to maybe 255, 260 with a stop loss below about 265. This remains a weak stock, and it is a short on rise. Problem is this is gapped down so much that taking shorts at this stage can be risky.
Okay, and from there on, let's take up Cholamandalam, because that's the other one which is under a tad bit of pressure today, losing out for the second straight day, nearing its 100 daily moving average. In terms of the futures, I'm not sure. Okay, there is a lot of increase in open interest, nearly 8% there. It's down 2% today. It's below the mark of 300 rupees per share. Navneet, your view on Cholamandalam Finance, what's the way to look forward to?
Look, it has seen a kind of a big breakdown to my understanding. The stock started to sustain below 300 levels. There are greater chances that if we're not getting any major pullback towards above the 300 mark, there's a greater chances that with this pressure it can accentuate on the lower side. And I mean, looking at the overall weekly charts, it's looking likely that its stock can head below the 280 zone. So if somebody is a kind of a positional trader, one can keep a strict stop loss in the levels of 305 and can still initiate a short position. It's looking likely that much lower targets are possible in this stock, the kind of a breakdown that it has seen.
Okay, that's Cholamandalam Investment for you, a counter which was doing well, I guess, in the last 3 to 4 months. But in the last 1 month, we've started to witness some profit booking here. All right, let's move on to some viewer queries. Then our first query comes in from a handle called YR and wants a view on Glenmark. He's been holding. He wants a view at current market price, and what he wants to know is should he look to hold or exit this position. Of course, he's a short-term trader. I believe the stock's down about 2 to 2.5%, and with the fall that we've seen, it's approaching its simple 100-day moving average. It's taking support right there. Last 12 months, the stock's down about 48%. Abhijit, if somebody is holding Glenmark, the sort of correction that we've been seeing, what would you advise the viewer to do?
I'm not sure what price he has bought it at, but the stop loss should be 340, and if it closes below 340, it can go much lower. So he can hold it with a stop loss below 340.
Okay, well, from there on, we move on to, okay, I just want to address one more stock here. And, well, we do have a lot more weakness, and of course, in something like an HPCL, but let's also pull up something like a BPCL and take a look at, well, where things are heading right now. And perhaps also Indian Oil Corp and see whether or not there can be something else. So there is enough amount of weakness in BPCL as well. And of course, Indian Oil Corp, this is also down around 2%. But moving on, we have a query on Kotak Mahindra Bank. We have Abhijit on YouTube who wants the view on Kotak Mahindra Bank January futures. It's breached the level of 1650 on the lower end today. It's down 0.5%. Abhijit, if I can come back to you on Kotak Mahindra Bank, what's the way forward? What is your view?
No, even this has given a breakdown, so this also continues to remain a sell on rise with a stop loss above 1690.95, and I expect it to go maybe towards 1600 in the coming days. So I wouldn't advise any longs in this. It is still a short on rise.
It's a short on rise, Kotak Mahindra Bank, and the next query is in Balkrishna Industries. Remember, even the tire makers have been under pressure with the rise in crude oil prices. So we've got a query coming in from Alan Divahar, who is shorted the futures of Balkrishna Industries at 974. He's in the money as the futures are currently trading at 964. So 10 rupees in the money. He wants a 1 to 2 week perspective on this position. Navneet, what would you advise him to do? He's willing to hold on for the next 1 or 2 weeks, but would the advice be to book profit at current levels or to hold on to shorts and place a stop loss?
Well, it's a gutsy call to be on the short side on this stock, largely because it's been a rank outperformer in the overall the basket that it is in, the tire maker basket. But to my understanding, the kind of negative divergences started to visualize in this stock. On the upper side, it started to face some resistance, and the chances that it can be a high risk reward kind of a trade, whereby if the trade started to be in your favor, we can get a quick returns towards that level somewhere into 940 to 920 zone as well. So to my understanding, one can hold on to the it with a positional stop loss on the low on the upside somewhere into 980 zone, and it started to trade above that level. Then the stock might surprise you on the upside, and the greater chances that it started to trade below that 950 odd mark. We can see this pressure accentuating in this one. So just keep your trailing stop losses lower and just wait for a downside target. So the overall positionally is looking like it's heading much more lower towards the 920 odd zone.
Okay, and F&O student on YouTube wants to know whether or not it is a good idea to sell Colgate-Palmolive. Colgate-Palmolive has been absolutely flat in a very narrow range since the early month of December. So, pardon me, November, in fact, and we've started to see some amount of well, I would say consolidation, but we finally started seeing it trade below the mark of 1450, because earlier it was largely confined between 1450 and 1500, but it is now at 1435. Abhijit, would you take this as a sign to perhaps and an opportunity to perhaps go short on Colgate-Palmolive, or you don't really believe in that right now?
This stock is looking weak and it can go towards maybe 1430, 1420, where it can book profits.
Okay, that's Colgate-Palmolive for you. Remember, this has actually underperformed the other FMCG companies in terms of course, stock price appreciation in 2019. Let me take the next query from Srujan, who writes to us on YouTube. And Srujan wants to know, can Bank of Baroda March futures be shorted at current levels? Navneet, PSU banking stocks were showing some bit of traction in the recent past, but as usual, every time you see the PSU rally, that fizzles out, and that's exactly what's panning out today. Even on Friday's session, Bank of Baroda was down 3 to 3.5%. Would you advise someone to short the March futures?
Well, that's for the day. The stock is already down 4.5% kind of a see. I've already explained that looking like the overall traction on the PSU banking stocks are looking weak, and we have recommended Canara Bank to be on the short side. But looking at the overall structure on Bank of Baroda, it's also forming a multiple tops in the range of somewhere into 105 to 106 range, and since the first signs of breakdown started to happen below that 100 mark. So any possibly rise, one should use to sell, and now the stop loss should be placed at 101 levels. That's where one any rise towards the 97 to 98 zone as well. One should look to initiate a short positions with a stop loss of 101. The overall structure suggests to me that it's heading towards that 92 mark, and one can possibly look towards that booking profit in that range.
Okay, the next one is from Kshitij Sood. He wants a view on Reliance Industries and what can be done with this. Abhijit, how are you seeing Reliance Industries trade, and what is your view here? Do you see more weakness? Do you see more gains or consolidation?
Reliance Industries has a very big support near 1510, 1515 futures. So as long as it is above 1510, this can be a buy on dip, but on the higher side, it has a resistance near 1545, 1550. So basically, it is range bound between these two levels, 1510 and 1550. And I mean, he can buy or long on dip or short on rise, and above 1550 it is a clear long, below 1510 it is a clear short.
Okay, that's Reliance for you. For all the cash queries, this is for our viewers. We'll be addressing all of them on our Ask PQ show, which is at 12:30 p.m. So do tune in that time as well. We've got a query on the stock option side on Kotak options. So Gaurav writes to us, and he sold the 1700 call, and simultaneously he's also bought the 1780 call, and this position he's been holding since last week. Navneet, what would your advice be? Kotak's currently trading somewhere at about 1648. Thereabouts.
Look, the position that he has bought for is 1780 is deep out of money now in terms of call options. And to my understanding, selling a 1700 call is a prudent strategy. Overall, structurally, it doesn't look like that the Kotak is heading on the upside. What we have seen is basically a lot of build-up happening at 1700. That's where the larger open interest concentration is at a Kotak level. So to my understanding, it can be a good strategy. Just meaningfully, if you get in and bounce towards on the upside, just try to exit that 1780 call. Does not make sense in terms of a kind of a payoff that one is getting in this strategy. Just hang on with selling in 1700 call, and if you want to buy it near the money call, near the money counter. That's in terms of strike 1740 to 1720 odd strike. You can try with.
Okay, that's the view coming in on the position in the Kotak stock option, but nothing's changed for the market. So do monitor 12,050 first, as highlighted by by our experts, on Nifty, and then of course the 50 DMA continues to be in focus, which is around the 12,000 mark. And Nifty banks also down about 1.5%, trading at levels of 31,536 thereabouts. But important to note, the market breadth is pretty weak. Even if you look at for the entire listed universe on NSE, and even for the F&O stocks, I was just checking, Agam, only 5 companies are trading in the positive territory. Yeah. Titan, Mindtrain, it's dominated, by the way, the IT pack, and Adani Ports on back of the acquisition is seeing some minor upticks today. But look at counters like NBCC, that's your top F&O loser, which is down 5%. The PSUs are down. Canara Bank, PNB are down between 4.5% to 5%. Oil marketing companies is something which we've already addressed. And Coal India, Adani Enterprises have seen cuts of between 3 to 3.5% today.
Well, there you have it. For now, the markets are looking weak. We will continue to track more here. And on that note, we are going to wrap the markets. But, would take a moment to thank both our experts, Abhijit and Navneet, for joining us and taking us through their views and solving a whole host of viewer queries. Don't forget to log on to BloombergQuint's futures and options pages as well for much more information.
Well, with that, it's a wrap on this edition of the F&O Show. It's goodbye from the entire team. You can stay tuned to BloombergQuint for more news and updates.